Hey everybody, I'm Joe Kellinger. I'm a real estate investor and entrepreneur, and we put these videos together every week to give you all the tips and insights from my experience over the last several years. So make sure you tune in and subscribe, and thank you. Hey everybody, thank you for tuning in. Today I have a very special guest, Ellie Perlman. She's a real estate investor and syndicator. Ellie, thank you for coming on today.
Absolutely, Joe. It's always a pleasure to speak with you.
Yeah, it's always nice to have you come on and give us your information. Now, Ellie has been in, how long have you been in multifamily investments? How many years? I don't remember. Long time.
I would say, yeah, well, a long time. I've been in real estate for over a decade, since 2007.
Uh,
I've done multifamily from the development side as a real estate lawyer before the world collapsed.
Loaded, yeah.
The economy collapsed back in
Yeah,
2007. So that was a long time ago. In recent years, I've been focusing on syndicating multifamily deals with my company Blue Lake Capital,
right.
and we're basically buying properties in markets that you know very well: Texas, Florida, Georgia. Nothing in LA yet.
Yeah,
um, and we just do that with investors. So we put some of the down payment, and investors are doing the same, and together we're buying properties. We're improving the operations. We're making the properties nicer so we can justify rent increases,
right.
interior renovations, for instance, or adding more amenities. And then we sell the properties after 3 to 5 years.
Okay. So shorter term hold. So very good.
Mm-hmm. Yep.
Um, with all the information you have across the country, I just thought it was very critical. I'm starting to see through our brokerage arm, uh, multifamily really starting to open up for opportunities. Whereas, in Southern California especially, there just hasn't been a lot of opportunities over the last several years, but we're really starting to see it now. So can you kind of walk us through your vision of, short-term, mid-term, long-term multifamily investments? I guess let's just go across the country as best you can within the markets that and kind of give, if you're going to be investing, where would you be putting your money right now? And just kind of go start from there.
Yeah, absolutely. The reason why my focus was in certain markets like Texas, Florida, Georgia, the Carolinas, um, the main reason, well, there's a good job growth and population growth. And right now, during COVID, things are a bit different, but those markets are still attracting people. So we actually see migration from core markets like New York, San Francisco, Miami. That are moving from the big cities to the more
Right.
affordable markets. And even then, in the Atlanta market, for instance, because downtown is more expensive, maybe not as expensive compared to LA rates, but tenants tend to move to the suburbs. So in the short term, in the markets where we're buying properties, we definitely see an increase in demand in the suburbs, in the areas that are 20, 30, 40-minute drive from the major employment hubs in those in the big MSAs. So we see that happening in Tampa. We see that happening in Atlanta, for instance. It's a function of two things. One, it's a trend that started before COVID, which is people were looking for value. So if it costs a tenant $1,500 to rent a two-bedroom apartment in downtown Atlanta, they prefer to drive for 25 minutes, maybe be in Marietta, for instance, and save $300 a month and rent the same apartment, but just, cheaper. So
Sure.
that trend started beforehand. And right now, this trend is even stronger because tenants are looking for places that are not so dense
Right.
population wise. They want more space. They want more green areas, more outdoors, uh, options. And you have a lot of those I would say the garden style apartment buildings that offer
Right.
all those options, outdoor amenities, for instance, they're located more on the suburbs where you just need more space. So
Right.
when the land where the land is expensive in the main areas, downtown areas, for instance, you don't really see garden style apartment buildings. You see mid and high rises, so they don't have the same outdoor space that you can find if you go a little bit further to the suburbs. So that's what we see in the short term. Deal flow is not the same as it was before, but it's getting better. I would say in the past 30 days, I've seen more and more deals coming to the market.
Well, have you?
Um, yes, in March and April, there was almost no deals in those markets. May started to trickle a little bit more, and in June you have a lot more. And this trend is going to continue because at the beginning, buyers and sellers did not know what to expect. So,
Right.
because if you don't know
The
what to
unknown.
expect, yeah, then you're just not buying.
Yeah.
I see that we're lagging. By the way, I hope that we can fix that. I think it's a Zoom issue.
Yeah. One thing, Ellie, that when you were talking, I was thinking about this. Everybody was always focused on transportation corridors before with multifamily. I don't know. Are people going to want to? Is that still going to be a focus? Being someplace you can get on a train, a bus, public transportation. Is that something you guys are taking into consideration?
No. So because we're not looking into the core areas, the downtown, the dense areas that offer those options, in the suburbs where you can find more value, tenants actually own their own cars. So what you need is access to main highways that can connect you easily to employment hubs, to, where the jobs are. So it's not so much the public transportation, access to public transportation, but it's more access to main highways that can connect you to other retail and employment hubs. And that's the main focus in the suburbs, which is our main basically focus.
Yeah, I would think it would be. I mean, I look at like what's happening in Manhattan, and if you're an apartment in a 80-story high rise, queue, and we have to do it in this office right now. You have to queue up to go upstairs. I mean, can you imagine working all day and then have to queue up to go two or three at a time in an elevator up to your apartment? I think those kind of buildings are going to have some real issues, and I don't know what you're going to put
Yeah.
back in there. Over time, they'll probably be fine, but short term, it's going to be a battle, I think.
Yeah, and I definitely see tenants, they're more nervous about sharing elevators, sharing, pressing the button that 100 other people pressed on the same day. And
Yeah,
that's why the garden style apartments, that offer, basically you have 200 units, for instance, spread over 20, 25 buildings. So you have 2 or 3 story buildings, no elevators, so you don't share the space, and even the staircases are kind of out in the open. It's not in closed areas,
yeah,
so tenants feel safer in those type of I would say of buildings compared to just a closed mid or high rise building. And that's pretty understandable. I actually expected some tenants to be nervous even about living in multifamily and wanting to rent a single family home, but
right.
A, that's more expensive, so not
Mhm.
everyone can do that. And B, actually the demand to garden style apartments actually increased. And again, you have all the amenities that you don't really have if you rent a single family home. You don't have, access to an outdoor gym or a barbecue area or a
Yeah,
tennis court and all those great outdoor amenities that are in such high demand right now. So I was surprised, but that's what we see right now in the market, just increasing demand for garden style Class B and Class A apartment buildings.
yeah. No, I can see that. I mean, I would not want to own a three-story where you had to get an elevator to go up to your apartment. Even that would be it'd be pretty scary, I would think. So midterm, what do you see over the next several months?
I think the trend will continue, assuming that the second stimulus check package is going to be approved, that the HEALS Act, some more PPP money for small businesses to continue hiring people, an extension of unemployment benefits, all of those things, once approved, and I think they should be approved in, I think tomorrow or in a couple of days. Once approved, then that will help with rent collections. Now, rent
Yeah.
collections, once rent collections is high, it means that sellers feel more comfortable selling their property and not taking a huge price cut, and buyers are more comfortable buying the properties, because they know that rent collections are, since the pandemic started, class B and class A rent collections nationwide is between 94 to 95% on average. So that's
Still,
pretty high.
yeah.
Yes. And not every month you're not charging, you usually don't charge 100% every month as is. Um, but it's still very, so, it's a good number. So I think as long as this trend continues in the next several months, then you're going to see more and more deals. The huge price cuts that we saw between 3 and 5% of purchase price in March, in April. Usually, those were deals that got under contract before the pandemic started, and the parties just tried to save the deal and
Yeah.
basically compensated. We're compensated on kind of met in the middle, and I saw deals close between 3 and almost 5% discounts in the markets where we're active in. I don't think we're going to see those price reductions moving forward, because in March and April, nobody knew how multifamily is going to look like. So I
Oh
think in the
yeah.
midterm, there are going to be more deals and less price reductions in the market.
Yeah. So your long-term view is multifamily is still a great place to invest across the country.
Yes, I've always thought that it's that this asset class is a good hedge against, inflation, and it's
Yeah.
it's more, I would say, I think it's a pretty safe investment. It's resistant, and it's not really recession proof. Nothing is recession proof, but it's
Right.
recession resistant, and we see that today. You still have to buy in the right place. I'm a huge believer in Class B assets. So these are assets in the markets where we're buying. These are assets that were built in the 80s, maybe all the way to early 2000s, and they're in good areas. They're in good shape. Um, Class A high-end buildings come second because they're still a little bit more expensive. So there is some migration to Class B. Class C are struggling the most because obviously it's just a function of the tenant base. These are the older properties with fewer amenities, and so a lot of people who work in the service industry, and that got hit pretty hard by the pandemic, they're the ones who are occupying those Class C assets, and so the collections are lower in those asset classes. You have higher vacancies because sometimes they skip, meaning just disappear after not in the middle of the night, after not paying for a few months. So Class C is going to struggle a little bit more. I don't know in the long term how that's going to look like, but I'm assuming that Class B is still going to be the leader when it comes to performing during this pandemic. You
Yeah.
have people that are earning enough wages to cover for rent, but it's not the most expensive product in the market that can expose you to higher vacancies because your tenants just cannot pay the rent.
Yeah. Yeah. I'm a firm believer. I mean, that's really what we own right now is Class B, B minus assets. We buy them; they're somewhat distressed, and then we just fix them up. Which, there's something to be said for working with somebody like you. Is every property that we've bought, and we just own in Dallas right now. That's it. We've liquidated everything else over the last several years, but is we had out of town buyers that this last property purchased a few years ago. Out of town buyer hired a property management company, and that property management company was just, I mean, they were overcharged. The manager was making a certain fee. They were charging an extra almost 20% on top of that, saying that was her salary. So if you're an out of town owner, you need to make sure you find the right people, somebody like you. Now, do you guys do the management yourself, or you have vendors that you already have checked out?
We're working with a very, very large property management company. So
Good.
they are managing our assets, and
Yeah.
we're very hands-on sponsored. So we're make sure to manage the managers. During the pandemic, it was almost at the beginning on a daily basis, and
Yeah.
now our properties are doing pretty well. We've actually been overperforming. We've increased rents between 10 and 28.5% since
Okay.
March. And these are specifically in the Atlanta market has been very, very resilient. And I don't know if you read, but um, Atlanta is one of the three markets in the US right now. I think the other one is Philadelphia and Portland that have reached rents that surpassed pre-COVID rents. So
Really?
those three markets have rents that are higher than rents pre-COVID, and that's exactly what we see in our properties and the portfolio that we own and manage in Atlanta. We don't own and manage anything in Philadelphia or Portland, but I
Right.
can definitely say that that's the case in Atlanta. I
Market.
think the average in the past 12 months was almost 6% rent increases. So that accounted for the decrease in rents during March, April, and May. But they're back. Rents are back and they're higher than they were before COVID because there's just
Yeah.
increased demand for those for areas in Atlanta. Atlanta is pretty affordable, if
Yeah.
you compare it to other markets. And right now I've been hearing several cases, and I'm sure it's going to be a trend of people who, especially people work in tech, because many times you can work remotely, and say, "Hey, I'm done with New York. I'm done with San Francisco. I cannot." I'm making 200-300K a year. I still cannot own a house.
Yeah.
I'm going to move to Atlanta. I'm going to move to Dallas, and I'm going to live like a king. I can
Yeah.
buy a nice house, and even because I can work remotely, and even
Mhm.
when they do that, even though they get a cut, in their salary is being adjusted, they can still live very comfortably in other markets. So we definitely see a movement because the work from home strategy or mentality is more prominent right now. It gives the option for tenants to move to warmer climates, more affordable cities, and the demand is just increasing in those cities. So again, I don't know what's justifying the rent increases in Portland and Philadelphia, but Atlanta is a very, very strong market right now. And I've been hearing it from other sponsors that own and manage properties in Atlanta. We're all seeing the same thing: very high performance, increasing in demand and in rents as well.
Well, it's having a great property management. So, you've got
Also,
to find them. If you're not going to self-manage like we do, then finding the right vendor. Do you guys focus on tax-free states? You said Texas, Florida. Is Georgia? I don't know if Georgia
Texas,
is.
Florida, Georgia, and we're looking into the Carolinas right now. Mhm.
Okay. So yeah, you're focusing on those. Okay. That's always a good idea as well. Um, all right. Trick question. I've got $1 million cash. I know you're a syndicator, but let's say I wasn't used to say that. If I'm going to buy it on my own, where would you put your $1 million right now?
In 4 to 5 different deals at this point. Make sure that all of them have some tax benefits, such as cost segregation, for instance. Prefer value add because then you get a very you can maximize your losses on paper and basically pay very little to no tax. I would just spread it out over a few deals. That's what I would do.
That I completely agree. All right, so everybody that's tuning in, Ellie has been syndicating for a long time. If you don't want to go it on your own, then I definitely recommend that you reach out to her. She's got some assets that she's looking at right now. I will put her information at the back of this video so you can reach out to her, or you can reach out to me directly, and we'll get you in contact with her. Ellie, thank you very much for all this quality information. I just think as a multifamily investor, they need to hear a lot of this because you've got just such a wealth of information that you can give out. So thank you for taking the time today.
Absolutely,
So
Joe. It was fun as always. I'm sorry we didn't get to do that in person like we did before.
hopefully soon. Hopefully soon.
Yes,
I'm a little over this stuff, but I'm locked in this office and talking to a computer. So yeah, I'm kind of over it, but hopefully everybody, we get through this quickly. And everybody, thank you for tuning in today. This video will be up next week. And if you have questions, reach out, and thank you for tuning in if you haven't done so. Please do subscribe. And Ellie, thank you very much.
absolutely.